crypto is a cheat code to increase your wealth. Well, sometimes anyway. It may feel the opposite in the recent market conditions, but do you want to know why it makes people so much money? The 4-year cycle. Yes, regular as clockwork. Thanks to the Bitcoin halving, we get 3 years of interesting market conditions followed by 1 year of, pain and suffering. All crashes into a terrible abyss, meaning that you can load up when it's cheap, sit on your hands for a while, sell at the top perfectly, and walk away. Thanks, Satoshi. Except what if that 4-year cycle we all know and love were to suddenly stop working? Markets have changed. It's not as easy as it used to be. You're probably finding that out right now. And what if, in fact, that's our current situation? Today, I'm going to look at some pretty compelling reasons why the 4-year cycle might actually finally have broken and what to expect next if this theory is true. So here's the first thing to consider. Bitcoin is operating at a different scale now. We're in the big game now, guys, in case you haven't noticed. In its earlier years, BTC was regarded as a tool for criminals, man. It's a Ponzi scheme, bad stuff, this scam. Ultimately, just a way of throwing away your money. People understood, obviously made a lot of money by being contrarian to that point of view. Now, these takes were all completely wrong, but still, the market cap was low, and the BTC chart then moved with the volatility that we see meme coins move with nowadays. That's because it was so much smaller. But that's all changed. And in 2025, BTC's in a completely different league. It's got a market cap of around $2 trillion. It's being, shilled by BlackRock and Larry Fink, the US government, US states, central banks around the world looking at it, countries mining it, companies buying it, ETFs going crazy. Spot ETFs have had insane flows, $40 billion in the last year. There's talk at the highest levels of the stuff like the Bitcoin Strategic Reserve, putting it in the Sovereign Wealth Fund for the United States. Bitcoin investors right now, it's a totally new breed of people. Corporate institutional buyers are here. But government bodies and corporations can't just ape into coins the way that retail buyers can, which is a good thing, as it means that for once, regular investors have been able to load up big before the big shot Wall Street whales get here. But anyways, large institutions need a lot of time to change course and to get allocated. Or as Matt Hugan over at Bitwise puts it, they're like giant hankers. Well, individual buyers are more like speedboats. So then we get a situation where over the course of months or years, bureaucrats in DC, bankers on Wall Street, can slowly move in that direction. Now, in terms of the bureaucrats, they put together a crypto-friendly regulatory framework. Institutions on Wall Street are then able to recalibrate to an environment in which digital assets have got the green light. And we get accumulation at a scale that is unbelievable to understand. We've already seen it with ETFs, right? Massive accumulation at incredible scale, but a much slower pace. And that change of scale and that change of pace is unlikely to fit in cleanly with the mania-fueled boom and bust halving cycles we've seen before. The game has changed. After all, why would there be a 2022-style total crypto wipeout, the kind where pundits declare crypto's dead forever, man, if the scheduled crash coincides with newly permissive regulation that brings in the fresh institutional capital to the tune of, potentially trillions of dollars. Yes, trillions with a T. Again, we've already seen 40 billion come in just through ETFs. What about institutions that are buying directly? Millionaires, billionaires, all this kind of stuff. Now, before we get into how the future could be different, a quick shout out to today's sponsor, the best place to buy and sell Bitcoin so you can front run the institutions and a ton of other top crypto coins, especially for those of you in the USA, Canada, the UK, and that's crypto.com. And did you know that in addition to being able to buy crypto on crypto.com using a wide range of fiats and cars and all that kind of stuff, super easy, great app, by the way, you can also earn on those assets once you've bought them. Yeah, listen up. So by locking up your coins in the crypto.com app, you can start earning some very juicy rewards, including 5% on Bitcoin, 5.5% on Ethereum, 6% on your USDC stablecoins, and lots of great rates for top altcoins. And it's super simple. Just click on Earn, select USDC as an example, select how much you want to put in, the term, confirm your deposit, and bada bing, bada boom, you're earning money. You can even stake your assets like CRO with crypto.com. Again, very easy process. Just select the asset, how much you want to stake, and in just a few moments, you will start earning rewards. It really couldn't be much simpler, the crypto.com app. And when you use the link down below to start your crypto.com account, you're going to get an exclusive $50 CRO bonus. Go check it out. Link down below. And thank you for supporting our sponsors. Okay, so back to it. Another point to consider here is that although the cycles have been pretty precise so far, there haven't actually been very many cycles because BTC only launched in 2009. So we're drawing a very small sample size. We're trying to make predictions about the market. Right now, we're only in cycle number 4. Crazy how fast it's moved, isn't it? Plus, if the Bitcoin halving is a major factor, then we should expect its impact to diminish as market cap and distribution grows, while the amount of coins still to be mined decreases. Basically, Bitcoin is gradually achieving a more balanced state, with volatility decreasing the further in time we move out from the Genesis block. Related to this, Chris Berniski, formerly of ARK Invest, he recently highlighted a framework called the Perez Technological Surge Cycle. Yeah, Perez Technological Surge Cycle, man. Yeah, let's go. This seems to illustrate the trajectory that Bitcoin is currently on. It shows an S curve starting with a frenzy of disruption, followed by the stability that comes with later adoption. This later stable period is labeled as the deployment phase, and it's possible Bitcoin could now be heading into that part of the story, while our tried and trusted 4-year cycle thesis, just part of the initial chapter, may not be part of the future chapters. Let's also think about an ever-present aspect of trading and human nature. And of course, we're talking here about the importance of market psychology. At this point, the 4-year cycle is not hidden knowledge. It's widely recognized and widely expected because we see business cycles and stuff generally move in that fashion, credit cycles, etc., but not always. And if everybody knows the cycle is going to happen and the whole crowd plans to enter and exit at the same time, all taking profit in the exact same way, then the trade becomes ridiculously crowded and it kind of doesn't end up working out like that. After all, in a scenario where everyone sells at the same time, who's buying? Yeah? In that case, just thinking about psychology, you might instead get accelerated cycles with rapid rotations, as we're already seeing, where narratives last for months, some coins last for a few hours, as traders aim to get a head start on the rest of the crowd. Also, we're already seeing smaller, very, very volatile mini cycles, outside of Bitcoin, right? We're talking about those things like the AI agent cycle, and that'll come back. Very bullish on AI long term, but man, short, brutal cycle. All these things operating on their own time scales and volatility. Now, this has happened with meme coins, with AI tokens, other smaller narratives as we've gone through, real world assets, for example, and it all might point to a situation where Bitcoin breaks away from the rest of crypto. So you get more stability when it comes to BTC, but a lot less predictable environment when it comes to everything else, which, to be honest, is kind of already what we're seeing. All these altcoins are back to almost bear market lows. In some cases, they're down 90% in a few weeks. Bitcoin just chilling around 100K. That also means the idea of Bitcoin pumps followed always by the altcoin season may not be the same as it was in the past, because BTC buying by institutions doesn't really rotate into shit coins. They just buy and hold Bitcoin. They're not going to buy your monkey JPEGs or dog coins. Finally, then, that all said, let's identify how future cycles will be different. So we focused on the crypto cycle in particular, but actually all markets move in cycles. So we have, for example, the well-known economic cycle. There's the property cycle, which operates on approximate 18-year scales. When it comes to Bitcoin, some key cycle drivers will inevitably continue to occur. That means there will be different triggers that bring in new buyers every so often. Markets will still get over leveraged. They will still get frothy. Of course they will. Greed's not going away, is it? Corrections will still occur, but there will be less likelihood of devastating catastrophes in which everything breaks. The technology and the market itself is maturing. Bitcoin pullbacks theoretically should be a little bit shallower than before. Maybe we're already seeing that to some extent in this current cycle. That could result in a Bitcoin cycle that becomes more tame, more like gold trades. There shouldn't be any kind of sell before it all dies, forever rush for the exits on every pullback, although there still is, because PTSD is a very real thing in the market. Because everyone now knows that Bitcoin's here to stay, but you're not all in Bitcoin, are you? No, you're waist deep in dog shit coins. I get it, okay? But a lot of supply is going to be vaulted away for Bitcoin and ETFs and corporate treasuries and even national stockpiles, which will drive the whole crypto market up. Then there won't be as much sell pressure when the market dips because Bitcoin's locked up in central banks and shit like that. They're not going to sell. Overall, then, as traders and investors, we always need to keep an open mind and adapt to new conditions that we see in front of us in the market, and the market is changing. We have every bit of proof of that. So I hope that this got you thinking about the possibility of a different kind of crypto cycle coming. The theory remains to be proven, but it is an interesting theory. Thanks for watching.